Morning, Friday, April 4th, 2025. And we are in a global trade hurricane and a volatility hurricane here as VIX trends above, well, not trends, but it's in a bullish trend. It's going above 30 here today. Incredible how risk happens slowly and all at once, as one of my mentors says, and continue to say, study volatility. It's going to guide you where the puck is going with markets. And we are going to see accelerating selling in risk off, risk on beta plays here today at the VIX at these kind of levels. Get ready. It's about to be margin call city in a lot of trades. I talked about this 2 weeks ago. I'll put a link in the below comments. I talked about collateral and global margins, margin calls potentially for CEOs and other hedge funds out there who have too much risk on. Switzerland, what does it matter? What does Switzerland matter? Well, big sell-off here into Europe now. It's carried over. Europe's been holding up. But a 4% down on the Swiss exchange today. Well, Switzerland is actually home to Swiss National Bank. That's more a hedge fund, the world's largest hedge fund, and it is an actual central bank. They use their fiat Swiss francs to buy U.S. equities, and they are one of the largest global holders of those Bag 7 names. Massive holdings of 150 billion. So you get a major liquidity event, and Swiss need to liquidate and get some good collateral. They're going to start selling those equity names in a hurry, and that will further cascade selling in those Bag 7 names. Italy down 7% here at the end of the week. France, the DAX, even Germany that's been holding up is rolling over hard. Not a lot of places to hide in Europe either here on a Friday. What's the impact of all this going to be? We don't know, but Powell's out with a forecast saying we're looking at least 150 basis points negative to GDP on top of the slowing growth we already had. Inflationary increases, obviously, stagflation environment, with China putting another 34% tariff on all imports after yesterday's announcement coming out of the U.S. So aggravation on both sides. We are in a hurricane. And like I say, we are on a don't know where we're going. There's a lot of vibes here from 5 years ago of March 2020. I'm starting to see here market trends and similar sets where that's true commodities. Look at oil here just collapsing out of the blue. That's really sending a signal that global growth is slowing in a hurry, just like back then 5 years ago. Lines up similar set with bond yields just collapsing here. The US 2-year, big lower low, 3.5% on that yield. Canadian bond yields down big, continue to project further easing ahead for all central banks globally. That's what's going to happen here. Monetary fiat money printer is going to go brr again later on this year. But until then, there's massive pain out there in these risk on trades. Look for a lifeboat out there. Low baby trade stuff I've had positioning in large part of my portfolio is stuff like TUA, IEF, SJB, Inverse Car Company ETF, PHYS, the miners, stuff that's not really being hit here. You look yesterday at the consumer discretionary ETF, XLY, versus the consumer staples, XLP, one of the largest outperformers of those two ETFs going back 20 years. Kroger, Philip Morris, Budweiser, those names are up. It's these higher beta things that are just not going to work in this hurricane. You got to take down risk if you're exposed there. Be careful out there. See you on Monday.